Crypto Instincts, here to give you everything you need to know to succeed in the world of crypto investing. I will show you unique tips and tricks to make your life easier. We'll keep things simple with a focus on the big picture along with the key factors that really drive the market. I prefer combining fundamentals, technical analysis or TA, along with a keen instinct to gauge all the different hype factors that really drive the market. These instincts we really all have from our experiences in all different walks of life. But this is one of my passions. I put endless hours of research following the different updates from different aspects of the market, which I will try and condense into key points to focus on. I want to provide you with all the tools, resources, knowledge, and skills needed in order to feel confident navigating through this market, confident in your research and making your own decisions. Also give you a heads up and warning for common pitfalls to avoid, and of course the best tips that I can to help you maximize profit in this market. This is whether you are a hodler or a trader. I will try to have all the bases covered. Once we have figured out where we are in relation to the market, it's time to get a feel for the environment and how the game works, what drives the market. I will show you the key factors to focus on and a quick tip to avoid for some newbie mistakes. Here's a quick game for you. Can you spot the shitcoins? You know, in the beginning it might not seem to be very easy, but take a look. Do you think you might find some? What about this? How about these? or piggy coin, right? I mean, I'm not calling any of these out, but you know, we're in the back pages, lower rankings. So this is what I talk about when I say small caps. Now, I will have a whole video dedicated to explain easy ways to break down coins. I have a cheat sheet ready for you to use and to make life a lot easier. But for now, I'm just trying to give you a quick look at how easy it can be to kind of spot out what people call crap coins, right? I mean, you'll see this in Reddit, you'll see this everywhere. It's really not that hard, and there's even easier way for me to break this down for you. For right now, this is just, you know, a little quick look at how simple it can be. And the other thing I told you to really be mindful of is pump and dumps. Now, the market is really new and there's limited regulation. So pump and dump is happening from coordinated efforts from people that are actually open to invite you to join. So there are tricks to learning how to spot these. In the beginning, it might seem a little hard because it's hard to tell the difference between true hype when there's a lot of people actually behind it, or there's a bunch of shills, meaning like people that just get paid or they have something to gain by promoting something, right? So it's hard to tell in the beginning, but when you have a little technical analysis foundation to you, which I'm going to provide for you, that's why I want to make sure you understand all three aspects, right? Hype, fundamentals, and technical. Because when you combine all three, even if you're not totally deep into any one of them, or let's say you're weak in one of them, if you know at least the basis, you can prevent yourself from pump and dumps and losing money and getting caught and trapped. It's horrible. I've never been involved, period, so I can't even say that, you know. It's never, you can get caught in hype trains, but pump and dumps is something that I don't even consider. Some people might get tempted, thinking that they might get lucky and get the early alerts, which they might do. Just like any type of scam, they'll hook you in with the first two that put you in the early lineup. You might get, oh, this actually works, and then you get caught later on. So pump and dumps is something to really be careful of. The quick tip I can give you, practical, is again, when you look at volume, this is not easy if you don't have some history of technical analysis, but if you look at volume, pump and dumps usually happen when there is no volume to speak of prior, a little volume, and it causes a big price bump, and then no volume to speak of afterwards. Most healthy coins, not all, but the large majority of the healthy coins are going to go up in the type of pattern that you normally recognize. It's kind of up and down, but it's healthy in, climbing. So when it comes to pump and dumps, it's just quick ones, quick ones, quick ones, large volume, nothing afterwards, large volume, nothing afterwards. Like I said, I'm not calling Megacoin or any of these coins out. Do your own research. There's ways to make your research more efficient, and only go into coins like this if you have a really, really good reason to. Otherwise, do you only go into coins you've done your research on? It's pretty simple. So pump and dumps and shitcoins, you guys be on the lookout for them. I will have a much more detailed video on how to categorize coins, how you can simplify this in another video. But for now, be careful with these. Let's get into the 3 different types of analysis we can do in the crypto market and what drives the prices. That's the most important. Why do we even care about these things? It's because these things drive the market. So fundamental analysis is the first thing we're going to touch on. Fundamental analysis, it can be tricky. This actually, I was stuck on this for a little bit. Technical analysis we're not talking about the technical side of the business or the blockchain technology, or just technical analysis when we're talking about markets, or strictly talking about charts and what you can read from the charts. Fundamental analysis means everything else almost that isn't related to technicals. So the overall market, any regulations that's going to affect the market or that particular project. So the first place that you're going to want to keep tabs on all these would be blogs, news websites, whichever one you want. I'm just showing you one of the most popular ones that most everybody is in crypto that is using. This is one of them. There are a few. I will give you all the tools and resources in the next video, which is called Tools and Resources. I will have everything linked up for you, ready to go. It'll be like your toolbox, your arsenal. By the end of the series, you're going to have everything that I have that given to you, and you can use it however you want, and you will find that it will make your life a lot easier. So find your own blog sites, find your own articles that you trust. It doesn't have to be from this website. This is just one of many that you can go and get updates from. So overall market situations, overall market news, as you read more and get into it a little bit more, you'll start to get a feel for which type of news actually affects price, which type of news doesn't move the needle at all. There's some, like I said in the past video, there are some articles that come out on specific timing because it's going to generate clicks. Keep that in mind. Like sometimes what they say doesn't even matter, or it's history, or it's like news that's being regurgitated 2 months later, just because it kind of goes along with why the price might have went down. So keep those things in mind. But it's always good to have your hand on the pulse, especially if you're a trader. Having your most of your day is going to be spent on technical analysis, reading the charts, but make sure to keep tabs on fundamental analysis, any news that comes out. Especially if you're keeping tabs all the time, you will begin to find the trend on what kind of news is going to matter to you. So this is just a good thing to always keep tabs on for anybody, really. The other part of fundamental analysis that most analysts, bloggers, or websites and YouTube promoters, or just YouTube helpers like me that wants to help the new people coming into crypto understand different projects better. Fundamental analysis will be broken down by what you can research from the project. So I was going to do an example for Ethereum, but the website's changed quite a bit since when they were first launching. So one of the better ways of showing you, I'm just going to one that I recently put a lot of work into a couple of months ago. So this is not even live news anymore, okay? So I'm not shilling anything here, guys. If the people that think I'm shilling coins, it's just the reason why I want to show you is because you can see the structure, the general structure of how it looks like, because most projects are going to structure their website very similarly, and key points I'm just going to go through, so it's very practical for you guys to see how to even go about this in a really quick way. So you come here, you click on the website, it's going to bring you over to what the company website is going to look like, right? So the structure is all going to be very similar to this. Make sure you can read the first part, which is their vision, like their mission, whatever their mission is, should be nice and simple. So in this one, you know exactly what they're trying to do. Pretty simple. Not going to talk about it too much. It's going to give you some framework of how the blockchain works, what the technology should be in terms of whatever industry they're trying to get into. It will explain it a little bit. With some will have videos, some will have these pictures, pictorials. Roadmap is going to be a part of most of the newer projects. So this is where you can get a pretty good idea of what's to come, and a way for you to be a project manager in a sense. You can keep tabs, see if they hit their deadlines. Most of the projects are a little bit late, but as long as you see progress, it's a good sign. And some projects, not all of them, will directly link you to their white paper and GitHub. So for anyone that's more technical than I am, I can't really read code, but for those that, like I said, you have that in your arsenal, that's your advantage to this market. You can come here and check what they're doing. Most blockchain projects are open source, so they'll let you look at what they're doing. Some are, they might be shy about it, but this is just a way for you to. White paper is the same thing. You don't have to be completely technical to understand it. This is the way I look at it. The companies that can use common terms to convey what they're trying to do is higher in my books than the companies that's going to try to go completely jargon and hype words and just try to confuse you in a sense, or basically write a bunch of pretty words that don't mean much, that doesn't even give you much of a summary. So this is for those that have a lot more time and effort to dedicate into this, because like I said, if you have the time and effort and dedication, these are all advantages. You're going to be ahead of the game. As much as I'm going to be here to try to shorten and make your life easier by providing you efficient tips, nothing is going to trump hard work and effort on your own, because I put in endless hours of research on my own in order to feel this confident and feel this comfortable navigating through this market, no matter what type of situation it is. Understanding the projects of good potential or probably a shitcoin very easily, very quickly. So these are all going to come with time. You guys, depending on how much time you are just being around it with immersion, it's going to come at different timing. But overall, don't be scared of white papers. If you're really interested in a project, it wouldn't hurt you to just take a quick look. They're usually about 10 pages, maybe 15 max, some even shorter. The shorter, the ones that are better, in my opinion. So I don't read through every single white paper because I don't invest in every single project. So some of the stuff that I go into, just the website alone, and I can say, you know what, I'm not too interested, at least not right now, because I've already researched hundreds and hundreds of projects. I'm not going to be able to invest in hundreds of projects. I mean, no matter how you balance out your portfolio, you're not going to try to do $1 or a couple of dollars in each one, right? So however you want to look at it, by the time you do enough research, you're going to get to a point where your research goes far beyond what you're going to spread out your funds. Let's put it that way. So this is all due diligence. It's great that you would know, but for beginners, do 5 or 10. Start with 5 or 10. Start small. Don't overwhelm yourself. And like I said, in the next couple of videos, I'll have that cheat sheet with an easy way of breaking down the coins for you. That's going to make your life a lot easier. So for the fundamental analysis, just come to the website, go through what you can and understand whatever part. Like if you understand partners, if you understand investing, if you've been a part of, if you followed along with Y Combinator and They have a great YouTube channel, by the way. You can learn a lot about how those type of investment companies think. And if you recognize some of the names, big names out there, and you tie projects together to say, hey, this is a pretty big investment company that's partnered up with this project. Those are key things. If you recognize Tencent, I mean, most people recognize Tencent. Loopring is another crypto project that has a pretty good promotion going. So when you recognize these things, you can tie things together. Some of the old school investors might recognize FBG Capital. This is more of an Asian market thing. But so when you have some ins and understanding of any of these key points, understanding the technical to read GitHub, follow their Reddit threads to keep up to date with what they're doing for marketing. So if any of you guys are marketing experts in your own life, understanding how they build hype and what is actual potential to hype compared to just blank hype. So there's different factors you can put into use for fundamental analysis that's going to be in your own strength. So everybody can do fundamental analysis. It really just depends on time and effort. I'm not going to go too much further into this because there will be other videos where I'm going to give you key tips on how to do fundamental analysis. And we will get into technical analysis a little bit. I say a little bit because technical analysis is one of those things that it's a skill. It's one of those skills that once you want to dedicate some time into learning, this is a transferable skill to many different markets. Because all markets are made up of human emotions and one person selling and one person deciding to buy to determine the price. Going from market to market, you're still following very similar ideas, very similar structures. So once you decide you are interested, you want to at least have this in your toolkit. This is definitely something that I would recommend for you to learn and practice. I will provide you with a recommendation video later on with the different people that's helped me along the way and built up my repertoire. I've learned from several different people. There are different courses out there that's very helpful. They're not very expensive, and it's up to you. It's just I love learning from the best. When I see somebody that I think is doing it the best, I want to learn from that person. So I've taken a little bit from them, as well as my own little base that I had, my little foundation that I had. But in the beginning, without getting too deep into all the different indicators and how you can use them, technical analysis can be done just from reading volume and price action. Volume just means the amount that is being exchanged at any given time, probably in a day, right? Let's say the amount that's being exchanged in a day. The volume is high compared to history, then we're looking at volatility here. We're going to see something. It's either going to be huge price ups or downs because this could be selling volume or it could be buying volume. You can't see the color for this, but in different exchanges and in different programs, you can see the different colors for volume. Same as price action. Usually price action is determined by candles. Most of you guys probably seen candles before. With candles, you can read it a little bit easier, and candles is pretty simple, and I will cover it. Like I said, I'll cover the most basic things so you have the foundational knowledge. That way because in the crypto market, one of the reasons why I as much as I know this is boring to a lot of people, technical analysis, the crypto market is made up of so many traders, because I was mentioning that this is considered traders' best dream playground, right? Because of the volatility, the price swings you can have from 6,000 to let's say here, this is Ethereum we're looking at, so 600 up to 900 almost in a matter of 10 days. I mean, what kind of trader would not dream to play in this kind of environment, right? You got to know what you're doing. But the reason I'm saying this is that, so when you're doing your research, no matter what kind of blogging website you're on, no matter what website, no matter how you're searching in YouTube, you're going to get bombarded with charts. You're going to get bombarded. They're going to explain to you even fundamental analysis with a chart behind their screen. So if you don't at least familiarize yourself a little bit with it, a lot of times when you're absorbing information, you're going to feel like you don't know what they're talking about. So having that foundation is going to, first of all, is going to add to your repertoire of the things that can give you an advantage in the market. And on top of that, remember I was telling you about the spotting pump and dumps, knowing when to get in, dollar cost averaging, or when is the bottom, how to, well, I can't teach you how to time the bottom. It's very hard, but you can kind of gauge where it could be the bottom, where I call a buy zone. You know, it falls into that buy zone. Hey, pull the trigger, let's go. So this is in the beginning when you don't have, you're not in exchanges, because right now if you're going by my videos, you know, I'm still not, I haven't gotten to the how-tos yet. You should be preparing yourself and doing your research. You can read charts based on price action and ratios of movements. Is it going up or is it going down? Just from here, you can use different websites like Coinigy. Oh, I'll give you all the different links later on in my second video for tools and resources. So Tradingview and Coinigy, and this one I use here and there when I'm not using exchanges to get a different perspective on it. You can use it for candles. So this is what I was telling you earlier. You come in here, you can look at the red and blue candles, the red and blue, sorry about that. So the red and blue, red and green, what am I saying? Red and green bars for volume, the candles you can read. So this is just another place for you to come and take a look. The main thing that I will give you guys as takeaways right now is consider using MACD and RSI. Okay, MACD and RSI are your go-to. There you go. Yeah, I was clicking it too many times. So this is how you tell if we are oversold or overbought. I will go into more detail, but these are the ones that you will basically use just as a quick glance before you jump in, before you decide to sell. Come here and check these two indicators, as well as knowing your volume and your price action, what the history used to be. We can consider using a Bollinger Band. This can be helpful as well, because if you're near the top of the Bollinger Band, you are probably gonna come back down to the mean, the average, or you'll probably come back down here. Usually how it swings is down, comes back up, and it comes back to the top of the Bollinger Band. So you kind of, this gives you an idea for the moving range. RSI gives you an idea of the volume. Is it oversold or is it overbought? It's pretty easy. In most charts, the line will have a center section that is darker or a different color, and as soon as it gets out of the box, out of the colored box at the bottom, that means it's oversold. If it goes above the box into the upper range, that means it's overbought. So that means anytime you get out of the box, you're going to be looking at a pretty intense reversal. So right when here got pushed so far down the Bollinger Band and the RSIs at the same time, this is a trading indicator to get in, ride the pump back up. So we're getting really advanced here, not even really advanced, but I don't want to overwhelm you. So this is when traders can look for times it's kind of, hey, this has got to be the bottom here. I mean, at least for this period of time, this is going to be the bottom. You know, if you're timing for a week or 2 weeks of dollar cost averaging, this is the day you want to be depositing that money. So you can, there's many ways of doing this. You don't have to be a trader. This is for your point of entry, point of exits. The MACD is a little bit more complex, but not really. You can look at it in several different ways. There's a little histogram here, right? That will show you if it's on the downtrend or it's on the uptrend. Pretty easy, right? If it flips to the bottom, it's on the downtrend. If it flips upwards, it's on the uptrend. Sometimes it'll give you false signals, like it'll go up a little bit, it'll go down. These aren't 100%, but when you combine RSI, the MACD histogram, price action, Bollinger Band, and I'll show you some other ones. If you use them in conjunction with each other, sometimes you will make it will support your decisions. Let's say that it will support your decisions or your instincts. This is what you use it for. This is what I use it for. I'm not a strictly technical trader, so that way I'm not basing all my actions off of technicals. I will base it off of fundamentals or something that I come across, some news that I come across, and then I will have a natural feeling or instinct about it, and I'll use technicals to confirm that. So coming here, you will see the reverse of the histogram and the MACD cross, which is a convergence cross, going from a downtrend up to an uptrend. You don't have to worry about the color lines. They're going to show up differently in every different program. As soon as you see the line cross either downwards, like here, or upwards, that's a reversal. Just like the histogram, it's pretty much, it goes in line with this almost. It's just two ways of visually knowing the cues, right? So, and always understand, MACD and most indicators are hindsight, meaning they will show up after something's already happened. So this is the turning point, as you can see right here. If we look, you see what I'm pointing at? This is a turning point where the tide flipped. If you're still waiting for the MACD, you missed the boat, right? If you're waiting for the RSI, you hit the boat. So use your instincts, use these things accordingly. These are more for confirmation, not so much for making future decisions. Sorry, I'll retract that. It is good for making future decisions, but in order to do so, you would have to be quite advanced. You're going to be past intermediary in order to do that at a successful level. That's why I say day trading is very hard. You learn to understand what your win and loss ratio is. Everybody's going to be different. You have to be very disciplined. So there's going to be a different video when we get into trading. But for right now, this is what technical analysis is. With the different charts, there's going to be different lines that people draw. I'm not going to do this right now. It's going to just mess up everything. There's different lines, which is called running averages. All these things are factored in before people make decisions for trading. And one of the main things I wanted to make sure that you take away is a lot of traders, when you're out there, if you're not listening to me, you're listening to a trader telling you about, hey, it's a good time to get into Bitcoin. It's a good time to get out of Bitcoin. Sometimes they're talking in terms of a trader to another trader. Like, remember I told you the trader portfolio. Some of them are using 80% of their balance. So when they say get out of the market, they're going to move out with a little bit of bad news because they're trading. They're not long-term investing. So when a trader sometimes will tell you in a video, hey, it's time to get in the market, that's them telling their trading followers to say, hey, this is a good entry point. It doesn't necessarily mean this is a good long-term investment point, entry point, because the market could still be going down for the next couple of weeks. Whereas for their trading followers, they can get in that day and get out 3 days later, where that might not be your plan and you could be stuck, right? So understanding technical analysis, understanding the perspective that they have when they're giving you tips versus a fundamental analysis person giving you tips versus somebody who is just going off a hype with nothing else at all, which is scary. I'll tell you that right now. If anybody is just going off a hype alone without fundamental research, without technical understanding of charts, it's quite scary. But you can spot them now that you've listened to me and you go out there. You'll spot them pretty easily. Those are just people trying to ride the wave, I guess. I try to provide you with real value, with real applicable tips, ways to make this more simple for you, and I'm not going to be promoting any coins. So I'll try to do some breakdowns of coins altogether, so that way none of them is singled out and being promoted. So I'm going to wrap up technical analysis for now. Like I said, we will go into it later. For those of you that are interested, I'm including this part in here is because this is going to be something that you're going to run across a lot. So to have a little understanding of what MACD, RSI, what these things are, even if you can't remember it now, just go to a different video later and we'll get the long breakdown. I'll try to give you a little cheat sheet for that as well. Okay, so I'm always looking out for you. Last but not least, hype analysis, or just hype. So hype is a little bit different from fundamental analysis. There is a gray area, very keen line that you have to try to understand and differentiate the two. It's easier once you get into it. and I'll give you some of the tricks to understand this easier. So technical analysis and fundamental analysis are very important, and you want to use those as your foundation. Use both of those things as your go-to for decision making. But everybody in this market right now, regardless if they're a technical guy or they are based on fundamentals, they will all tell you that this market is still driven by hype. And that's because there isn't too much to evaluate the projects yet. There isn't the revenue or the price history to base off of like the traditional markets. So when it comes to hype, one of the things you can do, like I'm showing you here, there's nothing for you to specifically pay attention to. It's just Reddit. So there's cryptocurrency threads. There are different projects you can follow. If there's any coins that you want, type it in the search and you can follow it. And when you're using it on your phone, it just makes it that much easier. When you have the thread set up, it's kind of like your Facebook feed that you're probably used to, or Twitter feed. You can scroll through and you can get all the updates in a quick couple of seconds if you don't stop and look into anything. If you don't have the time, quick few seconds, you can get a quick glance and update and see what projects are going on, what any updates for any projects. Dig into it when you see something that catches your eye. So this is another quick tip, and I'll go into later with the tools and resources. One of the main things to focus on is understanding what kind of news drives the market. So part of hype analysis is also called game theory. This is something that comes into play when you're a trader. But what game theory and hype both means is there's going to be events, news, updates, or some type of thing that's going to happen in the crypto market that's going to cause price movement up or down. The more you understand the different types of these things that can occur, and what the consequences are of those things. So having that understanding is going to provide you with advantages when you're in the market. Now, where game theory comes in is due to crowd groupthink mentality. If everybody thinks after a coin burn this project will rise in price, then there's going to be contrarian thinkers playing the game theory that's going to say, hey, if everybody's going to do this, we should do this here earlier, or in an opposite direction to profit off of the groupthink. So there's a lot of things to consider. If you go down too far this rabbit hole, you will get stuck. I get stuck. It's fun to ponder every once in a while, but if you start thinking, oh, what he would do and then I would do, you're playing chess by yourself with an imaginary foe. So you can get really stuck into this. Here's some quick tips applicable. So if you come into different categories this is called CoinMarketCalendar, CoinMarketCal.com, pretty similar name to CoinMarketCap. This is more for traders, more for advanced. Once you're into the market, don't overwhelm yourself with this kind of information right off the bat. It's not going to do you too much good right off the bat. This is for more once you're in the market, you want to determine certain waves you want to hit to cash out, certain waves you want to hit to get in. You can use this as your little tool to make some decisions or guide some decisions. So as I was telling you, there's different things like airdrops, AMA and Q&A. Like, do you think that's going to bump the price? I'll tell you, most likely no. Announcement news, that's too general. I'm not going to go in there. Coin burns, this is huge. This is when a project will usually tell you in their white paper for how they plan in their system to burn coins, and which means less in the circulation, which means less supply. So supply and demand, less supply, you're looking at higher prices. Then again, remember, game theory, you might not always be right when you're thinking about something. Community events, I'm not going to touch on that. Conferences, they will have their experiences. And the thing is with conferences, if you look at it from a video game industry, there are some conferences, they'll release some really crazy info. And there's some conferences just boring as what. So it depends. Exchange is huge. Here, let me show you. When you're in our home base here, CoinMarketCap, when you go into any coin, so let me go to a smaller coin because the big coins kind of defeats the purpose of what I'm trying to show you. So let's say we want to go check out Enigma, right? Easy. We go to Enigma. We can see if you click on market, because this is a chart that we are used to. If you click on market, you have to scroll back down. This is pretty annoying. But look, you can see all the markets are listed in. This is going to come in handy for you when you are targeting specific coins. And later on, when I show you the different exchanges, what the perks and differences, and some ways you can avoid signing up for like 15 different exchanges, which I would never recommend. Forget those passwords, man. So this is where you can see how many markets they're in. Getting listed on an exchange, why I'm bringing this up, is every time a coin hits an exchange, you can almost expect it to go up in price. Game theory or not, in most cases, because in the long run, when you hit on a different exchange, especially if it's one of those more popular exchanges, it will naturally provide you with more volume. So if the coin is any good at all, and usually coins that are pretty good gets listed on multiple exchanges. So that's kind of one of those things you want to pay attention to. Those are almost, so far in history, pretty sure shot of a good price bump, a pretty significant one. Pay attention to this when you get a little bit further into it. So I would say even before you get advanced, you start wrapping your head around exchanges. Forks and swaps. Forks we'll go into later. Forks, I don't, it's just basically like Bitcoin Cash. You guys, most people know and understand that. And if you don't, forks is something that is almost like a split in stocks if you think about it, but it's splitting into a different brand. It's pretty nasty. It can cause way different types of swings. It can go up, it can go down. Game theory is just crazy in this, so something I would not advise on too early until you get a better understanding of the technology behind everything. If you understand blockchain, if you're really one of those tech strength type of people, yeah, this is something you can wrap your head around. But otherwise, take your time before you get in there. Same as having partnerships is pretty good depending on the partnership. So if you recognize some of the big names, this is helpful for you. So if you're one of those people that understand different industries and what some of the big players are, and you recognize one of these names pop up, yeah, this is key advantage for you. Rebranding is hit or miss. There has been some really successful ones like Neo. It went from Anchors and now called Neo. Most people know Neo now. That was huge for them. Nano recently did one. It used to be called Rayblocks, and they recently rebranded to Nano, and it did okay, but they did it during a down market, so nobody really saw the full impact of it. But even during a down market, they had a pretty big pump, so it was bad. Now this isn't gonna work for everybody, right? Though Nano and Neo both have real momentum behind their projects and years of launching actual products, so it's quite different when you look at it that way. I'm not going to go into any of these because we covered it before. So these are just something to understand when you consider hype analysis. This is what I mean. There's different ways that you can use your instincts to understand from your previous experience, different market experience, your own key strength. Like I said, maybe it could be marketing, it could be technical in terms of technology, in terms of industry. So if you put those instincts into how you measure hype and certain news that comes out and what it could mean, as you get a feel for this comes with time, and it doesn't take too long. Same as the Satoshi thing I was telling you about, understanding the altcoin trade value to Bitcoin. Those things you don't have to force yourself to learn right away to say, hey, I understand crypto. That's one of those things that it will naturally come over time. As you get more involved, those things will come naturally with time. Same as all these things I'm mentioning right here with this list of things that you can be looking at. But you can get familiarized by coming to this website. I'll link it for you guys. I'm not going to brag too much, but I can promise you some of the tips and content I'm providing you here are hidden behind paywalls and articles and paid courses. And we're just getting started. I want to give you all the knowledge and tools you need to succeed in the world of crypto. Now that you understand what drives the market, it's time to come up with a plan to figure out how to win and succeed to reach your goals. Make sure to like and subscribe. It will help me a lot. Show me some support. Give me some questions. I will make sure to support you guys in the comments section. I will try to be as active as I can. Keep following along. See you next time.